Hey guys, Mike here. So old Papa Jerome Powell spoke today and we got the 25 basis point hike, right? So that was to be expected, and I'm not even going to show you any of the footage of him because it'd be a waste of your time. Let's just go ahead and put it this way. One, they did the rate hike. They gave themselves an out for the future by saying if there's any like stress or something happens in the market, then maybe that's going to deter them from their goals, which are obviously to get inflation down to 2%. How do they do that? Continue to roll the balance sheet off. Continue to maybe have more rate hikes in the future, but they gave themselves an out in case something happens. The other one was, which the most alarming thing he said was, they're not even penciling in a recession now. Now, normally, when they say stuff that definitive, it's usually the opposite, right? I mean, how long do we hear, oh, inflation is transitory. Oh, my goodness, maybe it's not. Oh, we got to do something, right? And I remember back, what was it, 07, 08, or whatever it was, when the Fed said the same thing, we don't see a recession or anything bad happening here, and boom, obviously the whole market fell to pieces. I believe they also said, if I'm not mistaken, I could be wrong on this, but didn't they say before all those regional banks started going under that the banking system is strong? And next thing you know, regional banks were going under, right? And so then, of course, they were so strong, now they started loaning out hundreds of billions of dollars to them, by the way. And I'll get into the regional banks in a minute because they had a weird reaction today to the news because rate hikes aren't good for the regional banks at all. But they don't seem to notice that. So that was an interesting one. Second, let me just say this. I see it in the comments. And obviously some people don't watch, like a lot of people, they won't watch the whole videos. They'll just fast forward through, and I get that. I do the same thing. So, understand my position very clearly. I play the markets that's in front of me. It's the way it is. But I put more detail on how I really feel into members' videos, the Discord, stuff like that, because on this channel, I don't believe it's my duty or job to push my beliefs on you. Okay, I believe it's to present the data fairly, right? And then to let you make the decision because we're all grown adults and all that good stuff, right? And I like to force people to think for themselves. I think it's a good thing to do. I do it to my child. I do it to, people I know who are adults. When we start engaging in conversation, I like a good debate. So, that kind of stuff. But I mean, it's just one of those things I just think, we all can think for ourselves. You're very smart people. So, and I know that from reading comments, reading your emails, all that good stuff. And so, again, I like a good debate. So, you can come out with that. But obviously, what I've said in the past, I've done multiple videos now. I bring you the data showing you that, are we due for a pullback? Yes. Is it a crash? No. Why is it not a crash? Because I've showed many times, as long as you got this much liquidity going in the market, the Fed's back and everything, and we're not having earnings apocalypse. We'll get into a few of those coming up here. I mean, I know Meta is booming right now in after hours. Once again, another mega cap moving up, right? Google, we'll get into, boom, moving up. There's not this earnings apocalypse, okay, right now. Does that mean it can't happen? No. You also know I've been very clear about, since the government took over the markets back in 09, 2010, the market has never ever showed in the last, almost 13 years now, that it can sustain growth and actually a healthy economy translating into a healthy market with really high interest rates, which now we're at the highest we've been since 2001. And while the Fed is rolling off its balance sheet, it can do it. It can remain crazy and want to just run up in this pause deal, whatever. But eventually, rates always take hold. It always happens. Okay, now whether that means they're going to cut before this happens, who knows? But we tried it one time. That was in 2018, epic failure. Okay, and so we'll see how it goes, continue forward. But you can't time it. You don't know when it is. So I play the market that's in front of me. Okay, let's be very clear on that. But there are plenty of things that could go wrong. The thing that's happening now is every time something goes wrong, what happens? If you saw the video yesterday, which by the way I had to delete that video because thank you to Wall Street Journal, any money that comes off that video they're going to get now. So because they copyright infringed me, so I appreciate that. I took 1:30 out of that thing. It was an 18-minute video, and there you go. So if you run a YouTube channel, do not take anything from Wall Street Journal. I was afraid they were going to do it, and they did it. They don't let you share any of their stuff when it comes to videos, so just FYI on that one. But if you saw it, which you won't see it anymore, I just cut it out today, what do you see happening there? Every time something goes wrong, they step in even more with something new, right? So that's kind of the problem, is they're backstopping, not letting the market be a free market at all. So that's why you can't, it's like when they say don't fight the Fed, yeah, don't fight the Fed them raising rates, but also don't fight the Fed and thinking they're going to let the market just burn, right? They're just not going to do it. Okay, not now. Maybe one day, you never know. And so, that's where I stand. Hopefully that clears that up and everything. And so, yes, do I play both sides of the fence? I buy calls, I buy puts, I buy stocks, I sell stocks. Yes, I just play what's in front of me. That's what I keep trying to find when I do members videos on where is all the money not piling to yet? Where could it rotate into? All this good stuff, and that kind of stuff. So just keep that in mind. So now, talking about information, I present data. Try to be, I see something I need to debunk, I'm going to debunk it. And I hate when people present data and they'll show like a range, and it'll be a certain, like from this year, oh, this is fixing to happen, and they forget to pan out for you because they don't want you to see it. So I'll start off with this, and we got, a boatload of stuff to talk about here. And so just keep that in mind. Now, the S&P says top range according to the S&P/M2 money ratio. For those who don't know, the M2 money supply increased slightly again, so it's 2 months in a row now. It's increased slightly, still negative by the way. But if you compare it to obviously this ratio where you take the SPY, the S&P, and divide it by M2 money supply, you'll see this right here, and it'll say, hey, it's about to top out, right? And if you look at this from 2017 up, you say, yeah, it's getting pretty close up there, right? Still got a little run to it. But then I can go in trade view, and I can pull up the same thing into money supply, and I can divide the S&P by it. And you look at that, that's the identical chart they had up there, right? And you say, yeah, we're getting close to topping out there, and not much room left, right? If you're going off this ratio and stuff. But then the problem is, if I go to pan out, what they forget, oh, look at that. That's the .com bubble. Oh, so, wow, there could be a whole lot more room to run if we get in some AI bubble, which, of course, that's what's driven those big mega caps and a lot of tech stocks to keep driving this up, right? And so if we get into another bubble where it just starts pumping like a madman, absolutely, it can go absolutely crazy. But, so I think it's important for you to know that. But also, when you look at this, you go, yeah, there's a level there where it looks like, ratios come in handy. I just did a whole video on ratios about a week ago, how important they are. And you sit there and you go, well, yeah, we could hit that little peak right there. And maybe that's one of the things you see that absolutely can start selling down the market, right? And so I think it's just important to understand and have the full concept. So if you see us blow by that, if you're tracking that ratio and you go, why are we blowing by it? Well, it's because we're in another bubble probably, right? Because that's the only time we've gone above the levels we're at now. Now, when it comes to the housing market, hey, look, the housing market on a short term, you can see is in a trend, but the sales of the homes aren't coming in as what the projections are, right? So you have 697,000 new homes sold in June, which is a lot. And then below estimate of 725K, plus they revised down the 763K from last month to 715K, right? So that's the fifth straight downward revision, just FYI. So these numbers are way off on how they're measuring it. But you can see short term, what is it in? It's in an uptrend from October to now. Even when you got these little revisions, it's moving just like a stock, right? But then when we go to a larger time frame on this, well, if this is a stock going from 2020 to 2021 to 2022, that would be lower highs, right? So it wouldn't be a stock you want to be getting into, right? And so again, can it all of a sudden move up? Yeah, so as soon as if this continues to move up and all of a sudden, you go, well, look at that, it's a higher high. Now we got a different kind of trend going on. But of course, why is it like this? Because of rates, which this rate hike shouldn't help today. And of course, they're just extremely expensive. So again, in certain areas, they're dropping double digits prices. In other areas, like I live in Florida, it's going up still, okay? Because we have a shortage and a lot of people are still moving here, okay? So just keep that in mind. Now, I find this funny. It's amazing what a day makes. This was yesterday, last night, and I said, wow, PAC-W sure is acting weird for somebody who's getting bought out. Most of the time, the stock goes up, right? But all of them are red the day before the hike. And then all of a sudden, they do the hike, and you get the complete opposite. I mean, it's almost identically opposite, right? So now it's 26% up on PAC West, which makes more sense, but all of them went green. Forget the hike, even though they're saying, if you keep raising rates, it's not going to be good for us. Still went green. And guys, before we continue, if you get anything out of this, please hit that thumbs up down there. I really appreciate it. And if you like the material here and the videos, think about subscribing. Which again, is just one of those things it's absolutely nuts. When you think about it, it's the opposite of what you would think would happen, right? They're telling you, hey, this isn't good for us, but it didn't matter. And why? Because it's a beat down area where people are going into it. They're just putting money in there, running it up, and if you pull up a chart, especially, it don't matter if you pull up one of the 3X leverage ETFs, what is it, KEW something, the regional bank ETF, and then you pull a volume profile on the side, and you'll see the reason why, because it did such a massive drop down so fast that there's not a lot of resistance going up, right? And so if people are buying calls and loading calls and buying and buying and buying, they'll push up fast. And that's what's basically been happening. Now, here's a couple of signs that will show you why people are bullish and they're still continuing to put money in this market, right? You look at defensives. Right now, you got the defensive sector completely giving way to cyclicals, right? And you can see this when you look at utilities. They've struggled against the broader market, right, since May. And then despite, any outlook for consumer spending or any negative consumer spending outlook, the staples have broken down versus discretionary. And you can see it in these charts plain as day. Now, if that changes and shifts, that paints a whole different picture. But that's what, big money's looking at. It's what everybody's kind of trying to pay attention to here. And that's why you see money continue to roll in these areas, even though we're saying, man, we're running out of money. Well, obviously not as of yet. And, another thing is, look at what's going on with call buying. At the bottom, you got panic. At the top right here, you got euphoria, right? And so what's happening? You're seeing a whole boatload of call volume. And if you go back, though, the one thing to look at on this is, to me, it don't mean nothing. Here's why. Look at the times in history where this has happened. Sometimes you get a pullback. That would be a pullback. That would be a pullback, right? That'd be a big pullback there. But then here you get a little bitty pullback, and then it runs up even more, right? There you get a big pullback. Here you get a slight pullback, continues to run up. Here you get a slight pullback, 5 to 10%, then it runs up, right? You go over there, and obviously in 2021, people were euphoric. Well, of course, the whole market crashed because they were trying to front run this recession we were supposed to have, right? Now, what else we need to be aware of? Like I keep telling you, pay attention to the breadth, right? One way to look at this is new 52-week highs. Obviously, the NASDAQ, having new 52-week highs, that's slowing down dramatically right now as this has happened. But again, market is, at least in the NASDAQ, it is spreading out. You go down to the Russell, it's still abysmal, right? I mean, it's single digits, not much going on. You can compare it over there when we were in 2020 rolling up. You just see all the new 52-week highs. You can see in 2021 before we hit the market crash and all that good stuff. Or actually, right, what was that, middle of 2021? It was rolling up big time. We were double-digit new 52-week highs. And now it's just not happening, right? Again, is this a terrible time for small caps? Yeah, because of the rates and everything and trying to get money to run their companies. And so, but again, and that's why you see the Russell, the NASDAQ, when it broke out, it broke out. When the SPY broke out, it broke out. What do you see with the Russell? It's just still struggling at that trend line, trying to continue to break out, okay? What do you see on the S&P? Obviously still moving up and only 5% away from all-time highs. And you can see, I mean, it was doing really well on new 52-week highs as things started to branch out, but it's back in single digits right now. It's starting to slow down. And you can see in the past, I mean, obviously 2020 is a total anomaly, by the way. Look how crazy it got with new 52-week highs on those stocks. That's insane. But you can see even for the 2022 crash, you're still in double digits, with new 52-week highs. And so you got the Dow. It says here, now this is 4 times since World War II. It's had 12 straight days. Well, today was 13. Okay, so it actually tied the record. It was in 1986, I believe it was. Actually, it's 1987, excuse me. And so, but you can see how rare this is, guys. Seriously. Since World War II, 4 times. It's been at least 12 days or more. Okay, so, it's a rare thing. What does that usually mean? You got to get a pullback at some point in time because markets just don't go straight up. Make sure everybody hears me say that. Eventually, you got to have a pullback. Does not mean a crash. It means a pullback, a healthy pullback, okay? So just keep that in mind. Again, because, I mean, where's the fear and greed indexes right now? Been in greed for weeks, it seems like. Now, earnings, Google. Hey, look at this right here. Finally got above that heavy supply area, that golden pocket area. Now, as a shareholder, I'm not happy about this. And why am I not happy about this? You know how I feel about these huge gaps up, okay, especially for a stock like Google. It's like, just don't gap up. Well, of course, it gapped up 5-6% right there. So we'll see if it's going to come back down, fall back below that supply zone, refill it. But again, it's got a pretty easy run to 133 before we start hitting that resistance. 150 something is the all-time high. And to me, it was funny. I found this meme right here. I was talking about their earnings call, and it says, "Say the line, Bart, say the line." And he's like, "Okay, we're integrating AI technology," which they said like 30,000 times. And everybody's like, "Woohoo, love it." And that's pretty much what happened on the earnings call. And then again, the earnings was good, so, not bad. But anyway, here comes Microsoft, right? Just the opposite. It wasn't terrible earnings, but again, everybody's worried about the cloud and things like that and the growth rate. But it drops down, but look what it did. I'm talking to the penny. Fills the gap and bounces right there. That's how powerful gaps are. Keep that in mind. Fell out of this channel finally, the $1 trillion channel, I like to call it. But as long as it can keep its butt above like 330, I think it is, 331, somewhere in there. Because if it falls below that, it's going to fall and fill the other gap. That's why Big Money made sure it bounced at the penny when it filled that gap. Okay, so if it falls below there, yes, it can go down some more and fill another gap. So just keep that in mind, because there's not much support to keep it up. And understand, I told you guys the other day, what I talk about, foreign exchange, right? How big it was on earnings. It's so big that Microsoft even brought it up and said it's going to increase its revenue by 1% over the next 12 months. And I didn't create a new channel in our Discord for nothing for the members here, right? Where we start looking at company earnings. This is the easiest way I know to look at them. But understand, you're talking about 1%, right? Tesla has around 25 billion, half of that's from overseas, okay? Imagine, we're talking about Microsoft, and then you got Apple coming up next week. Look at Apple up here. All these companies, about half their revenue comes from overseas now. When you go up there and you look at this, so Tesla's 25 billion roughly, and look at the revenue over here, 56 billion. Okay, so it's more than double. So we're talking about more money coming in just from a foreign exchange. Imagine Apple, I think, what do they do, 80, 90 billion a quarter and stuff? So just imagine what that's going to bring to them for doing nothing at all. Now, Tesla, I want to talk about this from more of a long-term perspective here. Obviously, you know, is in a rough patch here. This is a weekly, okay? Understand these trend lines right here. Obviously, that's the rejections 4 times off of that one. This trend line goes all the way back before 2020. You see multiple support and rejection lines here, and that just happened to coincide with the other trend line where it rejected. Then you got one right down beneath on the new rally from 100 on up, right? Looks like on the weekly the MACD wants to try to roll over. Again, if this happens and this stock becomes under pressure, right? The call buying stops, all of a sudden put buying starts up. It loves gamma squeezes and all that fun stuff. You know, you could absolutely see this, you know, 240, 220, somewhere in there. So 220, 240, somewhere in that area. Absolutely fall, fill all those gaps we talked about, right? And so just keep that in mind. We know how Tesla moves, okay? And it's not an accident. It's bouncing off all these trend lines. So just keep that in mind when you're thinking about Tesla. Again, if the call buying starts back up and we get another gamma squeeze, away we go. Now, Apple, this one, keep an eye on this. This is the 21 EMA. Okay, it's coming on earnings next week. But look how many times since March this thing has bounced off the 21 EMA on the daily. Okay, it's right above it. Still in the channel, hadn't fallen out, so keep that in mind. Because that's, if it falls below that, you know, and especially out of that channel, see you later. Now, of course, Chinese stocks are doing what? Still riding the news of them supposedly doing some kind of stimulus for consumers and consumption and stuff, which, by the way, somebody pointed out, and it's true, that is inflationary, just FYI. Now, the EVs are riding off Xpeng's news. They got some kind of partnership worked out. I think they got $700 million investment in them for some stuff going on there, and that's why NIO popped 10% and stuff. But again, EV mania is still going on again. Now, earnings, of course, a lot more earnings coming out. No big earnings like you had with Meta and Alphabet and Microsoft is going to move markets or anything, but you got a boatload of them tomorrow. All right, Royal Caribbean, McDonald's, Southwest, MasterCard, Crocs, Valero, AbbVie, Honeywell. Then you got in the afternoon, Enphase, Ford, Intel, Roku, which has been on a huge move lately. T-Mobile and a few others, so just keep that in mind. And then there will be a bunch of economic data coming out tomorrow. We will have continuous jobless claims, core PCE, bunch of GDP growth data coming out on sales and things like that. Initial jobless claims is going to be coming out. Then you're going to have PCE pricing quarter over quarter, consumer stuff, and then you'll have the Kansas Fed composite and manufacturing index data. So anyway, guys, hope you got something out of it. If you want to join the membership, 7-day free trial, hit the link down at the bottom, and I'll see you guys tomorrow.